Okay, regarding the FX market, I'd just like to start and bring your attention to euro dollar. Okay, because if you see euro dollar, right, we have broken the key level. In fact, I'm surprised by the momentum and how much it just went higher and higher and higher. Key level for euro dollar, the resistance is around the 114, 115 level. And if you notice since 2015, right, every time when we touch 114, comes down, touch 114, comes down, touch 114, this one has a strong breakout. It's a false breakout actually. Came right back down, touch again, came right back down, touch again, came right back down. So for the past 3 years, right, this area where we are is very, very key. Now, fast forward to where we are today, you can see that this area, if the weekly candle closes like that, is definitely a breakout to the upside. Alright, so just pay attention. This 114, 115 area is a very key area for the euro dollar. Yep, so let's take a look at the forward chart. Okay, if you look at the forward chart, same story. Nice and bullish. Right, but there might be a pullback coming soon. There might be a pullback coming soon. So if you zoom out the forward chart, okay, I'm not sure whether there's a bit of a channel here. Hold on. Okay, so there's a bit of a channel going on here. In fact, you can connect these lines as well. So I expect a bit of a pullback, maybe back to the 114.90 level here, and then we see whether we got any more legs to push higher. Okay, but the daily looks nice and bullish. I just think that this level here, just be a bit careful, because this 114, 115, a lot of bears are eyeing it. Alright, so I'll be a bit more careful to see whether I rather have my entries closer to support. Looking at the 4-hour, 15-minute chart. So this short-term chart, okay, you can see that there's a very nice, clear bearish divergence because the price is making new high, but MACD is looking lower high. First level of support you can look out for is around the 115.30 or so. Okay, if you're a shorter term trader, I think the 115.30 is quite appealing because what it might do is that it might fall, hit the support, and then start moving up. But once, let's say you got into this buy trade, okay, if we go near the previous high, you got to be alert enough to tell yourself, okay, that's it, I'm taking my profit. Okay, because if it's coming down, most probably it's coming back to this support or making a deeper support before continuing higher. Okay, so you got to be aware that, you know, if you buy at a short-term support, you have to look at the previous high to try to see whether you can get out first before the market turns around. Okay, so that's the euro dollar. Alright, but just the key thing to note is that we have broken a very key level for me, near the 11415, which says a lot of the dollar index. Okay, so just very bullish, just be a bit patient. Look for shorter term retracements like on the 15-minute chart like I mentioned here, and then try to look for short-term intraday kind of opportunities if you're taking it off the support. Alright, but it's looking very nice and bullish for the euro dollar. Okay. Let's see. One of the currency pairs that I wanted to mention to you guys is Aussie Kiwi. Let's see if I still have the lines. Okay, so this is Aussie Kiwi, right? I think last week was June 11. Okay, let me show you so June 11 is the previous webinar, and what I saw was this area here. Okay, this resistance area here. And we were somewhere near resistance at around 10550. Okay, because I saw this daily chart and I boxed it up. This is a consolidation period. And if you go to the 4-hour chart, okay, you can see that this box, which is near the resistance around 1055, has clearly been broken to the upside. So my plan was to take a shot at this resistance here. Let me actually expand the box on here. Okay, let me just redraw this rectangle. Yep. So my idea was to take a shot at this resistance area again because of many touches. Okay, and try to target back to previous support or maybe the middle. Okay, but what happens is the market just blazed through it. It did pull back. I think there was some news here, and then the market just continued higher. Okay, but it is what it is. I mean, the probability was high at the point in time because of resistance, but the market just break through it, and I got stopped out. So be it. Okay, so there's the Aussie key for you. Right now, the one of the most bullish currency is, you know what's the most bullish currency in the market right now? Yep, right now one of the most bullish currency is the Aussie. Okay, if you look at all the Aussie pairs, Aussie yen, Aussie kiwi, yeah, euro to a certain extent as well, many. Aussie is kiwi, Aussie is bullish as well. Yeah, exactly. Okay, so you look at all the Aussie pairs, they're just flying away. Okay, so for this case, Aussie kiwi looks very bullish. I would say that if you want to take long positions, right, might want to look at 15-minute charts because the way of the Aussie is moving is really bullish. So you look at the Aussie key 15-minute chart, sorry. So right now there's a bit of a bearish divergence. Okay, so the key level I'm looking out for Aussie Kiwi, it's around the 107.70 area. Okay, there's a bearish divergence. Okay, so even the trend is bullish, the bearish divergence on the MACD shows that maybe the momentum is dying off. And you might want to consolidate back to some level before pushing higher. So I'm keen to see what happens at this support area around the 107.70. Okay, and but every chart looking nice and bullish for the Aussie Kiwi. Okay, now let me bring your attention to Aussie dollar as well. So if you notice Aussie dollar, I've been mentioning this level quite a bit. Let me zoom out a bit. See how this circle I drew? Around the 730 or so. I've been mentioning these levels many times, and every time when the market touch, it comes down, touch, it comes down. But again, same thing in the Aussie Kiwi. Okay, my plan was to get short around this key resistance level. Okay, it's quite high probability, right, and good risk to reward because the number of times it touches that level and comes down since 2016 is quite obvious. Okay, but the market just blew it through. Okay, just blew it through the resistance, and right now I have to be flexible enough to stop looking at the resistance and tell myself that, hey, now it's bullish, let's look at some trades. So same thing for the Aussie dollar. Okay, if you see the MACD here, lower high, Aussie dollar making series high, I would say that there's a bearish divergence. So same thing, I'm looking for support at around 79, let's see, 79.18 or so. Okay, for it to continue higher. Okay, for it to continue higher. But if you look at the daily chart, the 4-hour chart looking nice and bullish, the Aussie dollar. Okay, Srinivas has a question. On Aussie dollar, I have a long question. Okay, Srinivas has a breakout question. So, how do you know and at what point do you decide there's a 90% chance the breakout is happening or about to happen? I'm talking about different time frames. When you go down to lower time frame, say 4 hour or 1 hour, how do you know the breakout has happened? Generally, I only look at weekly, daily, 4 hour, 1 hour time frames. Okay, thanks. Good questions, Srinivas. So now the thing about breakouts, right? I mean, we all know that the higher the time frame, the more respected. Okay, so for me, like if you look at the Aussie chart, right, we all know that this is a key level of resistance around the 730. And at that point in time, let's say if the daily candle has broken a new high, okay, we don't know how the daily candle will close because for all you know, if the daily candle close something like that, whereby there's a shadow, a candle shadow and things like that, it means that there might be a false breakout and it will start falling from there. But if you look at this particular example, right, okay, the daily chart is rather bullish, okay, and I mentioned that you wouldn't know whether it will end up as a shadow or it will continue to a bullish uptrend. Of course, on hindsight now it's easy to tell. But that's where you can use the lower term time frame to support your course. All right, so if you look at the, let's say the 4-hour chart first. Okay, so you can see that there's a nice bullish breakout. So what I do, Srinivas, normally, let's say if I'm bullish, let's say a key level is broken. Now, when did the key level get broken? The key level get broken here. And if you look at the 4-hour chart, right, there's 1, 2, 3, 4, 5 bullish candles clearly breaking the key resistance of around the 730. So the lower time frame gives you a heads up that, hey, this is a serious breakout, man. Time to plan for long entries. And did a nice pullback here before shooting up the roof again. I think this was caused by some news this morning again, but basically there was a nice pullback here before it shot up again. Okay, so the 4-hour confirm it. Now let's take a look at the even lower time frame, the 15-minute chart. Okay, so you can see 15-minute chart, see here? This was where the key resistance is. It started breaking out and then there was a nice breakout over here. So in terms of probability, number one, I would say know your key levels. So for this case, the key level based on the high term time frame is 77.30 or so. Okay, know your key level. And the second thing is that when you see price is trying to break out to the upside, obviously the longer term time frame, like the daily candle, has not been closed yet, so you don't know whether it might be a false breakout or not. But you can take cues from your shorter term time frame, like a 15-minute and a 4-hour chart, or even a 1-hour chart, to see whether there's continuity or there's momentum in the breakout. In any case, if you take a long trade on a 15-minute, let's say this is a 15-minute chart, right? Okay, this is the point in time. This is a point in time where there's a nice breakout, right? All right, you could have taken a pullback. So the breakout was anywhere here. You could have taken a pullback here, for example. Of course, on hindsight, it's easy, yeah. But I show you many examples whereby the pattern keeps repeating itself. Okay, so even though this is on hindsight, it gives you a better understanding. So you can see that this 7730 was key resistance. Now this big green candle, okay, is a confirmation, or some people like to say double confirmation, that we are clearly breaking out the key resistance level. And if you take this pullback, maybe your stop loss below the previous swing here, swing low, okay, it's a very decent risk to reward trade. Alright, so the lower term time frame can give you cues of whether it's a breakout or not. Now, of course, if you are near a time whereby the 4-hour candle is going to close, for example, or daily candle is going to close, then you might want to wait for the candle to close to see how it will close and assess whether the breakout is genuine or not. Okay, because if this is a key resistance and this is a 4-hour chart, and if the 4-hour chart closes something like that, or the daily chart closes something like that, the first thing that will come to my mind is a false break entry to short. Okay, so if this happened on the 4-hour chart, for example, what I'll do is on the M15 or 15-minute chart, okay, I'll be looking for shorts. So let's say the market goes up, breaks the resistance. It seems that it's breaking on lower time frame and then comes back down. So basically this particular price action will add up to form a 4-hour candle like that, correct? So if I see a heightened time frame showing a bearish pink candle like that at the resistance level, and my 15 minutes showing things like that, a reversal, what I'll do is that when it pulls back down, or it comes back down below the scene of crime or the resistance, okay, I'm happy to take a short here, and then hopefully it will drop. So this is a false break setup. I'll be especially keen to take such short, especially if it's a key resistance level, because the risk to reward for such trade is really, really good. Okay, did I answer your question, Srinivas? Okay, so that's the explanation of breakout. At the end of the day, I mean, trading, you got to take the risk. Okay, there's nothing that's 100% sure. All right, but if the breakout, it fulfills all your strategy requirements, your criteria, you just got to take it. Yep. Sort of, is it? Is there anything else you want me to focus or emphasize on? Because that's how I look at it. I always use a lower time frame to look for clues. Thanks for sharing that, Srinivas. So Srinivas says that the issue was that he kept thinking it's a false breakout and he did not pull the trigger. In that case, Srinivas, it's nothing to do with technical analysis anymore. It's psychology. It's psychology. Because you are not willing to, I mean, if you don't mind me just using your question as an example, right? But it applies to all traders. If you are not willing to pull the trigger and risk the amount that we can, and basically bear the risk tolerance, then it'll be very hard to pull the trigger. And along the time, sometimes the more we trade, right, and sometimes when we have a series of losing trades, or we get hit by too many false breakouts, there's a bit of a phobia that's forming. So in our mind, sometimes we're just a bit fearful to pull the trigger whenever we see a breakout. But put it this way, if there's a strong breakout, right, and if you take it off the 15-minute chart, you notice that the risk, let's say if you take this position here, this long entry here, your stop loss is here, your risk is quite minimal as compared to what you're targeting in terms of high term time frame. Okay, and you need to ask yourself, what is your risk tolerance level? Is it 300? Is it 10,000? I don't know, it's up to you. Which is why the risk management part is very, very important. And you know, you read books or a lot of trading gurus says that you should not risk more than 2 to 5% of your trading capital. Okay, so you got to work it out. You got to work it out. And once you decide what's your risk tolerance, right, you got to be very, very disciplined to stick to it. Because this risk tolerance helps you keep your mind off the fear of pulling the trigger. Okay, so that's one reason why you might question yourself when you want to pull the trigger. Okay, because if you're very comfortable with your risk, let's say every trade you risk $300 based on your 2% risk tolerance criteria of your equity. So let's say every trade you risk 300 and you're very comfortable with this amount. Okay, do you think you would question yourself if there's a breakout presenting itself? No, because you know that there's a lot of upside to it, and the most you lose 300, which you are very comfortable with. Okay, so I would say that it's a bit more of a psychology thing. If a trader, you know, is always questioning, second guessing whether it's a breakout or not. Okay, and of course you can use technical analysis to try to overcome that fear as well. But I would say it's a more psychology than technical analysis. So using multiple time frames, you know, ensuring that you have proper risk management, these are very, very key things. Okay. All right. Thanks for asking that question. Let me just erase this. Okay. A few other pairs that okay. So a lot of the Aussie pairs are in focus today. In fact, I was looking at pound Aussie. My favorite pairs are the cross currencies, right? So looking at pound Aussie, look at all the charts. Daily chart, very nice and bearish. 4-hour chart, very nice and bearish. 15-minute chart, super bearish. If you look at the 1-hour chart, right? Same thing, very bearish. Okay, I think the only entry that you could have taken today was a pullback around here. I missed it. This was the UK London Open. Okay, but the thing just broke straight through. Because initially, right, if you look at the daily chart here, I was a bit concerned on this support at around only the 167 area. Okay, but 167 broken clearly on 18 July, which is today. I think it was caused by the Aussie news this morning. Broken clearly downwards. I was waiting for a pullback to this support term resistance near the 16630 area. Didn't get there, and it starts going lower, lower, lower. Okay, I do not want to chase it. I want it to retrace to a better level before I can join the trend to the downside. Okay, but I'll be paying a close attention anywhere near the 16. What level is this? Let's see the forward chart. Okay, anywhere near the 165. Near the 165, somewhere here. Okay, now how I get that 165 is, of course, besides being a whole number, right? If you look at the daily chart, if I draw a line across here, okay, you can see that it was resistance, resistance, support, so around near 165. Okay, I know there's a bit of a bullish divergence on the MACD, but I'm not too concerned because it's a daily chart. Okay, so anywhere around the 165, I'm keen to take it down back to the previous low at least near the 164. Okay, but I'm going to be a bit patient. Okay, just because the nature of how it dropped. Yes, I'm bearish, but I need to find entry because the way you should think as a trader is how to manage your risk. So where's my stop loss? So instead of thinking of or the potential money or where the profit target should be, I always think of stop loss first. I always think of my risk first. So if it can come back to 165, what I like about it is that I can put my risk maybe above the previous high here and target the previous low. Okay, I would have much preferred if the market gave me a bit more pullbacks today, but it didn't. It is what it is. Yeah. If you look at Euro Aussie, okay, Euro Aussie didn't drop as much because Euro is slightly stronger than the pound. But Euro Aussie just as bearish as well. So if you look at the daily chart, broken a key support. See support here, the 146 level, broken a key support. 4-hour chart looking nice and bearish as well. I'm looking for a retracement at least back to the 146. 146. It might happen tonight. It might happen tomorrow. I'm not sure. But then keen to take it down again. Okay, but for this case, if I manage to get entry near 146, if it comes back to previous low, I'll be keen to get out first because there's a bit of a bullish divergence. You can see that it's a higher low on the MACD, lower low on the price, so this is a bullish divergence. Okay, but there should be one more push down from the 146 level. Okay, so just be a bit patient. So that's the Euro Aussie for you. The other one I'm looking at is the Pound Cat. Okay, so Pound Cat, right? I was very keen on the reference chart, the daily chart, because the daily chart is a nice downtrend like this. Look at the moving averages, and if you see the price is lower low, lower high, lower low, low high, lower low. I was very keen at looking near the 1.660 level to take a short entry to the downside. Okay, of course the move has already happened. So what happens that I took a few losses around the levels here. Okay, because this was a nice resistance. Okay, there were nice short opportunities. Okay, thinking that it might come down at least to the previous low, but it didn't happen. In fact, it broke up. Okay, took my stop out, and came to the next level of resistance around 166. Okay, but because my daily chart was a reference, right, I was very keen on daily chart because it's a very nice firm downtrend. I was very focused near the 166 level, what happened, and it seems quite toppish then. What I didn't like is what happened today, because near the market open, okay, the pair literally dropped. So I was eyeing this level a lot. And what I wanted to see on the lower term time frame is at least it really looks kind of toppish here, see here? So what I was hoping to see, okay, was either a false breakout entry here, because you can see this green candle. So I was looking for a false breakout entry here, meaning that the market was stoppish, then suddenly broke a new high. I was looking for it to come back down again, come back to the previous resistance level and take a shot from here. Okay, or at least if it doesn't do a false breakout, okay, at least slowly come back down, and then at least I can find some entries and I can put my stop somewhere here. Okay, but now this scenario happened. What it did, it just came straight down like that. Okay, so it is what it is. I'm still bearish. So what I plan is that I'm looking for some form of retracement. Now, I wouldn't want to short right now because it's way too close to the previous low. In fact, it is at the previous low, 16390 or so. Okay, so you'll be shorting straight into support. So what I'll be looking out for is maybe a retracement back to the support term resistance around the 16425 area. 16425 area. Okay, so this is a key level. Anywhere around here, I'll say. Okay, anywhere around the 16420 to 16440 area. And then I'll take it down back to the previous low again. I mean, some traders ask, how do I know it will be this area? How will I know? How will I know that the markets will drop from this area? What do you guys think? I got some clients asking me when I give them a trade idea, I say that, okay, it's bearish. All right, wait for a pullback around the 14630 area, and then maybe you can look for entries there. Now, how do I know? Of course, based on technical analysis, you see the multiple level of support term resistance. Okay, that's one. But at the end of the day, again, it's all about probability, right? There's no sure thing. Okay, now, because if you look at these levels, let me just delete this line again. Okay, if you look at these levels here, see resistance, support, so anywhere around the 16430, 16440, right, most probably there will be a reaction here. Okay, but it is a probability. There's no 100% that it will react from here, but this is a high probability area that I'm keen to take shots from because the overall trend is still bearish. Okay, that's the pound cat for you. Alright, so I'm looking at a lot of the Aussie and cat pairs because the trend is looking nice and strong. Now, any other currency pairs that you guys have? Let me talk a bit about dollar yen. So last week I did mention about dollar yen as well. So my Aussie Kiwi trade idea didn't work out. It break through the key resistance. But I did mention dollar yen as well. I'm not sure how many of you took it. Same thing for cat yen, I think. We were at this point here last week, exactly Tuesday, 11 July. And I did mention that this is a beautiful resistance level. Again, the market just dropped from there. Okay, right now, dollar yen, it seems to be consolidating this big fact. I don't know what chart pattern is this, but basically the next key support level is around the 1116070 area. Okay, look out for the key level here. Might have a bounce from there. Alright, so for those of you short-term traders, you might want to look at dollar yen for further shorts. You can see that it's a nice downtrend. So make a series lower low, consolidate, another lower low, consolidate, and it's trying to make a lower low again. I'm not surprised if we might come down to the key support level at around the 11170 area before the support comes in. Okay, but 1 hour downtrend, 4 hour downtrend, daily I would say it's a bit consolidating. Okay. Alright, so any FX pairs that you want me to look at? Okay, if there's no other FX pairs, once again, thank you so much for coming by. Like I mentioned at the beginning, this is my last webinar because I'm doing more management duties or management roles in IG. I'm still in IG, so if you have any questions or you'd like to talk about the markets, feel free to drop me an email or connect me through LinkedIn or just call me basically. Yeah, and again, I mean, I'm very passionate about trading, so I'm always happy to talk about the markets. Always find a strategy, stick to it, and work on psychology. All right, especially for those of you who have been trading for many years and not experiencing good results yet. Okay, it's all about the psychology. All right, so if not, don't forget to always plan and trade the plan. My name is Nabil Mata. Thank you so much for coming by for today's Technical Tuesdays. I'll catch you soon. Have a good night. Cheers.